So in terms of our global network and scale, this is how we look today. We pride ourselves in the fact that we serve well over 52 million unique customers. It's different from accounts. Unique customers means individual customers, and we have over 62 million accounts spread over 17 markets worldwide with a network of about 600 branches with over 6,000 professional staff. Total staff strength must be north of about 34,000. And of course, we are still in growth phase. People keep asking us questions as to why we see the levels of capital expenditure or depreciation, or sometimes they look at our CRR and ask why are we seeing all of those elevations. Access Bank remains in growth phase, all right? And so you will continue seeing, a spread in terms of, or an increasing spread in terms of our branch network, in terms of the countries in which we are present, and I'll speak to that in a little while, and as well as the number of our professional staff. We are established leaders as far as ESG is concerned. I recall at some of the bankers committee meetings, we have basically taken almost all the awards that have to do with sustainability. Now, we don't like it because we want other banks to also rise up to the challenge and get it, but I guess because we've continued to show great presence and show great capabilities, not just in Nigeria, but across the continent, we win several international awards as far as sustainability is concerned, and so today we remain at the forefront of it. We issued the first AT1s publicly traded in the market, all right? Not just in the market, but across the continent, and I'm talking about in the sense of foreign currency AT1. There is a South African bank that also issued one, but in local currency. For us to have swung this and done it with COVID, must speak to several things around the capacity of the institution to raise money in the international market. At the same time, we have spoken about our desire to be seen and known as Africa's gateway to the world. We've now basically placed ourselves in the critical trade hubs across the continent. And that has helped us as far as correspondent banking is concerned, as far as payments is concerned. I will not say we've fully achieved what we want to achieve, but quite frankly, more than any other African bank, we are basically laying the groundwork for that railroad linking the entire continent, which I think in this new corporate strategic plan, you will see us get to where we want to get to. Going into the next 5 years, what we've done is to look at Africa, first of all, as our continent. You have to be strong at home first before you go out, all right? And ask ourselves, where are the opportunities in the context of the continent? Then you have to ask yourself, what is there to be done internationally? And then finally, what we then told ourselves is, look, the whole world is going through significant structural shifts and changes. There are changes with respect to technology, changes with respect to demographics, changes with respect to data and cost of data. Look, if I asked anybody here 20 years ago, will you do retail? The answer would be no. The cost of serving in my village is too much. How much will you pay the teller, etc.? But guess what? Technology has made all of those things so much easier, particularly in Africa. But the World Bank has done studies which shows about 370 million Africans are underserved, and that puts Nigeria's figure at something like 60 million customers, 60 million Nigerians. For us, it is a massive opportunity for financial inclusion, and we can basically make sure that we are profitable with those customers. Access Bank today, I think we onboard something like 1.5 million retail customers every month, all right? And we will continue to do so. So the idea is that in this unbanked population, we will continue to push and get more and more people into the financial services sector that will lead to financial deepening and support our markets. We found in 2021 there was an addressable market pool in terms of revenues from Africa from electronic payments, all right, of about $24 billion and growing by 30% year on year. We found that the regulated lending business, all right, is about $3.6 billion, and that speaks to some of the things which we are talking about as far as our digital business is concerned. We found out that the trade in sub-Saharan Africa, all right, can provide that there is room, I'm talking of international trade, for almost $950 billion. This is something that some of the Western banks have left for us. So when you find the likes of Barclays leaving and all of that, this creates new opportunities for us to get into those markets and make money. And of course, as far as formal remittances are concerned, there's something like $100 billion that is supposed to be made there. Just think about that large corridor between Nigeria and Cameroon, the largest that you can see in the continent. we've not yet started getting the benefits of the cross-border trade and remittances and payments that exist inside that corridor. We don't want a franchise that can be disintermediated. We want to continue to support the entire continent. We want to support the Access Bank family of nations, if you understand what I'm saying, to make sure that we basically reap the full benefits of the continent. For the next 5 years, in terms of positioning, we will be one of the top 5 banking groups in the continent by the end of the strategic cycle in terms of revenues, in terms of asset base, and on a balanced scorecard basis. We will plan to deliver solid returns on investments to our shareholders, and will continue to target north of 25%. As a top 5 bank in the continent, our focus will continue to be on cost management and to make sure that our cost-to-income ratio will be below 55%. And we think that, given the fact that we continue to be in growth mode, that represents a ratio that is not bad.
So I think if you look, what this slide is trying to show is just the credibility that we've built and the significant growth that has happened between 2017, 2021, which was our full year audited numbers, and just give some perspective on 9 months into 2022. Across every financial matrix, we have done exceedingly well. You look at our gross revenues, they've beaten the market. Average market growth rate was about 6%, and this is across the African continent. Access Bank grew by 21%. If you look at our profit before tax, that grew compounded over a 4-year period starting 2017 by about 30%, compared to a market that was lagging at about 14%. Our total asset and our total deposits grew by about 30% and 27% each. Again, almost twice the growth rate of the market on an average basis. So it's been a solid performance, outstripping average market growth rate. Our ratios are no different. We've seen the ROEs grow from what's about 13.7 to about 18%. We've seen our NPLs improve from what is about 4.8 to 3.7. Our capital adequacy ratio remained north of 20%, closing at about 22.5%, 9 months of 2022. Our cost-to-income ratio remains elevated, and I think I'll speak to that further in the slides. The next slide just shows that this growth has been extremely diversified, so there's no one income line that has led. So around the 4 principal income lines that the bank generates today. So we have interest income. We are, after all, a commercial bank, so that will always represent the largest part of our income numbers. Over the course of the last 5 years, that has grown by about 20%. Our trading income, about 42%, is taking and leveraging the growth in our deposit liability base, the growth in our customer base, and we're leveraging that deposit and liquidity to generate significant trading income. You also see fees and commission. Given our retail play, you see the acceleration that has happened from 2019, post the acquisition of Diamond Bank. So 1 plus 1 wasn't 2. 1 plus 1 clearly is showing almost 21. The benefit of that, the technology, and then the scale that we have built since 2019 has seen an accelerated growth of what is almost 32% over the last 5 years. I think other income, about 9%, that continues to grow, and that's just incidental to the business that we do as a commercial bank. So this has been very strong growth, very diversified growth, beating the market average. And I think as we go into the next slide, what you see is that, let's even compare this to the numbers that we shared with the market in 2017. We had the same session in the stock exchange in 2017, where we shared numbers as to where we will end in 2022. We said we're going to get to total assets of about 9.7. We ended up about 13.4, 9 months. If I project forward to December of 2022, we'll be closing nearer 15 trillion than 13.4 trillion. So beating that target quite clearly. Share of subsidiary contribution, we targeted at 20, given all the markets we had shared in 2017 that we're going to go to. I think we had stated in 2017 we're going to go to markets like South Africa, Angola, Cameroon. All of those markets we're in today, we anticipated they'll contribute 20% of total revenues for the bank. We ended up seeing them contributing 21% to diversifying earnings from a geographical perspective. Number of customers, we projected north of 30 million customers. We ended up with 52 million customers and 61 million or 62 million accounts. In terms of market share, the project in 2017, I think we had projected we'd get about 18% market share. We ended up north of 22% market share on the average. On certain indices, we control a quarter of the market share. So around deposit, I think we had about 24% market share in deposit. Around assets, I think we had about 26% assets. But on the average, we're north of about 22, 23% across board. There's only one indices that we did not achieve, and that's our cost-to-income ratio. Target was that we're going to be 50% and below. We underestimated the impact of the growth that we've carried on over the course of the last 5 years. We're still in an investment mode. We're investing in infrastructure. We're investing in people. And that investment is coming through, and we see the numbers as we go into the next 5 years. A lot of that investment has been around our digital platform. You've seen the impact that has had on our commissions and fees growth rate compounded over the period, which is about 32 billion. Just to put it in perspective, in Nigeria alone, we are 20 billion more, we earn 20 billion more in commissions and fees than the bank that is next to us. So the number 2 bank is lower than us on a quarterly basis by 20 billion. Now, a lot of that investment has gone in. We've not even fully optimized that investment, but you can see the kind of returns that is throwing. Principal to that digital strategy has been our digital lending book. It's grown significantly. It supported personal loans, our payday loans, which are salary-based loans, lifestyle loans, as well as assets finance. We expect that this will be a significant thrust of our growth, given what we are doing with our hydrogen business, the payment business, as well as oxygen, which is our lending business. A lot of focus we're going to SME lending and small business loans that will be migrating to our digital platform for a lot more efficiency.
So if you look at the market, first and foremost, it's a growing market. Recently, we had the cashless policy again being pushed out from the government, from the CBN, and that tells you where we are going to as a country. Now, when you look at hydrogen is part of the cooperation, so the vision is not just Nigeria. So even as we spread and we conquer the Nigeria market, we are going across Africa and replicating same. Now, you heard earlier about the size of even the Access Bank itself with over 52 million unique customers. You'll be amazed that that's just a little fraction of the potential that we can actually get hold of. So when you look at it from that perspective, what we have as hydrogen is first being able to ensure that for every single transaction, every purchase that is done, at the heart of it is payment. And that payment will be going through hydrogen. So that's first. Secondly, we will be expanding into the ecosystem. To a very large extent, there's still a lot of cash going around in Nigeria, how much more in the African market. And that's where the spread is. And I think most importantly, it's now about bringing that interoperability. What we've seen in the market with a lot of fintech is very narrow focused. What we will be doing is cutting across the different elements and bringing everything together.